Good morning. I'm Courtney Carr, Director of Marketing and Education for IAPD. Thank you for joining today's e-training webinar, COVID-19 in Your Business, What the Stimulus Package Means to You, presented by Ari Starch of IAPD's office in Washington. During the presentation, you may submit questions into the Questions tab on your webinar toolbar, and we will answer them at the conclusion of the presentation. Following the webinar, you will receive a link to a survey. Once you have completed the survey, there will be a link to download the presentation slides. A recording of today's webinar will also be available for download on IAPD's website. Ari has more than 25 years of experience in domestic and international politics, grassroots campaigns, public affairs, and marketing. Prior to joining the Madison Group, he spent 12 years as co-founder and co-chairman of Artemis Strategies, a multifaceted government affairs firm that managed clients before United States Congress, multiple presidential administrations, state governments, and before foreign governments. In 2001, he was appointed by President George W. Bush to serve as member of the United States Commission for the Preservation of America's Heritage Abroad, and also served as the Next Generation Chairman of the United States Holocaust Memorial Museum. I would now like to turn the presentation over to Ari.
Thank you, Courtney, and I trust that we find everybody online healthy and safe right now. Just want to give a brief disclaimer at the beginning of this. This presentation is intended only for informational purposes. We are not intending this presentation to be any guidance or advice in terms of legal, tax, financial, or other advice for your business interests. We encourage you to reach out to your corporate counsels, attorneys, CPAs, or other financial or legal professionals before taking any actions you may feel necessary after this presentation. And reliance on any information in this presentation is at your own risk. I don't know why the lawyers make us do that, but they do. We briefly want to go over a lot of the resources that have become available through the first 3 COVID-19 packages. We're going to start out with specifically small business resources, the Payroll Protection Program, the Economic Injury Disaster Loans and Grants from SBA. There are mid-sized and large business programs at Treasury Department as well. There's been some significant tax code changes that should be helpful to your businesses. And then there's a significant paid sick leave and family medical leave support package and new requirements amongst all businesses that have gone into effect. And then I just want to briefly help you understand the critical business designation from the federal government side that is guidance to the states on how to regulate which businesses can and cannot stay open. There are other resources available than what we are going to review today, but these are just kind of the highlights of these initial ones. And in this package, you'll see tons of links to the resources. So we encourage you to download it and utilize the links that are in these pages. The Small Business Administration has created an owner's guide to COVID-19 resources. And this will really help you figure out what programs may really help your businesses. For instance, do you need capital to cover the cost of employee retentions? Then the Paycheck Protection Program may be the right program for you. If you need a quick infusion of a small amount of cash to be used more flexibly, you should look at the Economic Injury Loans or Grant programs. And if you need help with keeping up payments on your current or potential SBA loans, there is a Small Business Debt Relief Program at SBA that will help you with relief from those loan packages. First, starting out is the Paycheck Protection Program. Please understand that almost every program that has been created as a result of COVID-19 is intended for you to keep your employees on payroll. And the focus of the government is to help you pay for keeping those employees on payroll. The idea is they want fewer people on unemployment assistance as possible. And with the vision from government being that the less people that are on unemployment, once this ends, it'll be easier for companies and employees to ramp back up into work. So you won't have to go back through hiring and other problems. And keeping people off of unemployment, they feel, is much better for the long-term health of the economy. So this is perhaps the largest program that's available right now, the Paycheck Protection Program. It opened up actually first thing this morning. It is $349 billion. Frankly, we expect this money to go very, very quickly. So we encourage you to work with your bankers if this is the program you want to go through, to do this very quickly. And we had a conversation this morning with former deputy administrator of the Small Business Administration, who's encouraging businesses to not just apply through one bank, but to apply through multiple banks, if possible, because some banks will move faster than others, and this money is going out as we speak. So the focus of the Paycheck Protection Program loans are to provide cash flow assistance through 100% federally guaranteed loans to employers who maintain your payroll during this crisis. If you maintain your payroll, the loans will be forgiven. There's a host of very attractive features here. In essence, it's forgiveness of up to 8 weeks of payroll based upon employee retention and salary levels. There are no fees. And if you decide to use this outside of some of the applicable forgiveness factors, which I'm going to go over in a moment, you can have 6 months of deferral on these loans. Eligible entities had to have harm between February 15th and June 30th. That may change the deadline June 30th, but right now the program is for economic damages from those periods. And again, it is retroactive to February 15th in order to help bring workers who may have already been laid off back onto your payroll. I know this says loans are available through June 30th, and in theory they are. That's the guidelines of the program, but if the resources go out faster, then they will be exhausted. Who is eligible for the loan? Simply a small business that employs 500 employees or fewer, or if your business is in an industry that has an employee base size standard through SBA that is higher than 500 employees. Something for our customer base, for folks who are a lot in the food service side, restaurants, hotels, or businesses that fall in line with the classification system of accommodation and food services are also qualified under this. And independently owned franchises with under 500 employees are also eligible. So if you have a customer base, you may be able to encourage some of your customers to seek this if they didn't already know that. It's important to understand that sole proprietors, independent contractors, gig economy workers, and self-employed individuals are all also eligible for the Paycheck Protection Program. You are able to borrow up to 250% of your average monthly payroll expenses, up to a total of $10 million. This is, again, intended to cover about 8 weeks of those payroll expenses. And additional amounts can be used towards making payments towards debt obligations that are also forgivable. Again, as we've mentioned, this 8-week time period can be any time between February 15th and June 30th. So let's look at what payroll actually means. The amount of principal that may be forgiven is equal to the sum of expenses for payroll, existing interest payments on mortgages, rent payments, leases, and utility service agreements. However, other business expenses like inventory can be paid for by this loan, but will not be forgiven. In essence, it will not turn into, that section will not turn into a grant, that portion, but the rest of it could be forgiven. So what's important is to see what is included in payroll. This is a very broad definition, in our opinion. It's good, I think, for our purposes. Compensation, which is critical, obviously, includes salary, wages, commissions, or similar compensation, payment of cash tips or equivalent, vacation, parental, family, medical, or sick leave, allowance for dismissal or separation, payment required for the provisions of group of health care benefits, including insurance premiums, payment of any retirement benefits, payment of state or local taxes assessed on the compensation. But what are not eligible for forgiveness are employee owner compensation over $100,000, taxes under chapters 21, 22, and 24, employees who reside outside outside of the United States. And then there is a separate, which we'll go over later, qualified sick and family leave credits from the Family First Coronavirus Response Act. You cannot double dip, in other words. How much of my loan will be forgiven? It's again, as we mentioned, everything's focused on employee retention. So if you keep all of your employees and you use this towards that compensation only, all of that loan will be forgiven. Payroll costs plus any payment of interest on any uncovered mortgage obligations, as we've mentioned, plus any payment on any rent obligation or any covered utility payments. However, if you lay off employees, the forgiveness will be reduced by the percentage decrease in the number of employees. So in essence, if your total payroll expenses making less than $100,000 annually decreases by more than 25%, your loan forgiveness will be reduced by that same rate. And again, the idea is to keep employees on payroll. So if you have already laid off some employees, this can be used retroactively to bring them back onto payroll, as long as you've rehired them by June 30th. And again, it's for an 8-week period within that time frame. How to apply? Ironically, the way the application process works through any SBA loan is actually through your local bank, who are an SBA affiliate. Some banks, like Bank of America, are refusing to do business with folks who do not have deposit accounts right now. So my guess is the overwhelming majority of your banks that you work with are already SBA affiliated. But the application is literally at the Department of Treasury's website. So if you go to these links, you can find the application. It's just a couple of pages. It's very simple, but you would need your financial advisors, your payroll administrators, to help you fill all of it out. And then you would take that application to your local bank. I do want to go to the next program, which is called the Economic Injury Disaster Loans and Grant Program. If you apply for an economic injury disaster loan, you can actually receive an emergency advance of up to $10,000 to what's defined as a small business by SBA, which are, as we've already gone over earlier. And you can receive that $10,000 grant within 3 days of applying for the loan. You must first apply for the loan, but if you receive the advance, even if you do not receive the loan, you can keep the advance as long as it's used to keep employees on payroll, to pay for sick leave. And here's a little more interesting thing. It's different than the Paycheck Protection Program, is you can use it to meet increased production costs due to supply chain disruptions, or to pay other business obligations, including debts, rents, and mortgage payments. So this money's use is much broader, which may make this a more appealing program, again, depending on each company's circumstances. These are low-interest loans of up to $2 million, with principal and interest being deferred at the SBA administrator's discretion, and they are working on those guidelines now. And again, they can be used for many different expenses that had not that could have been met if the disaster had not occurred. So, including your other operating expenses. Again, eligibility is for 500 or fewer employees. Again, sole proprietorships with or without employees qualify. We had a question this morning: if you have multiple LLCs, can all of the LLCs apply? The answer is yes. All of the LLCs can apply for their own loans. They can each apply and take out their own advance. And the belief of the guidance right now coming out of SBA is that each one, regardless of common ownership, should still qualify. There hasn't been direct guidance on that. So again, work with your financial and legal advisors on how you're structured. But the belief is if everybody should be applying at this point in time. Independent contractors, co-ops and employee-owned businesses, and then tribal small businesses are also qualified. Now, if you get an EIDL or an emergency economic injury grant, can you apply for a PPP loan? Any advance amount received under the economic injury grant program would be subtracted from any amount forgiven in your PPP. However, you cannot use your economic injury grant or loan for the same purposes that you would use your PPP for. For example, if you use your EIDL to cover payroll for certain workers in April, you cannot use your payroll protection plan for payroll for those same workers also in April, although you could use it in different months for those same workers. So just make sure that if you're applying for both, you're tracking each one and utilizing those resources differently. Again, this is where your financial planners and folks will become critical in how you manage these processes. So that is the last of the major SBA programs that we want to go over that have immediate cash access for you. The Department of Treasury is managing a separate program for mid-size and large businesses. They've put a $46 billion budget together to direct loans to passenger and air cargo carriers and businesses critical to maintaining national security. And then there's $454 billion available for loans and loan guarantees under the Federal Reserve Act administered by Treasury. These are direct loans from Treasury, and there are lender loans financed by Treasury specifically for mid-sized businesses. Treasury can make a direct loan to a business of any size, but there's a significant number of restrictions that come with that. They must be a U.S. business and have significant operations and a majority of employees in the United States. There are loan terms that are subject to Treasury's new implementing regulations that are supposed to be at market rates but are no longer than 5 years. And for the term of the loan plus 1 year, there are restrictions on the company's ability to do stock buybacks, dividends, capital distributions. Employees above $425,000 salary cannot receive more and are limited to 2 times severance. Employees with compensation up to $3 million can't make more than $3 million and a half over $3 million. I'm not sure most of these would fit our business's needs and goals, but businesses with 510,000 employees are typically the target of these. Interest rates are supposed to be no more than 2%, and there would be no principal or interest payments for at least the first 6 months. The Secretary may extend that. The CARES Act, meaning the PPP loans and the emergency economic injury disaster loans, do not explicitly limit compensation. So we're waiting on the final Treasury regs for that guidance. And if you went with Treasury, you'd have to certify that the reason you needed the loan is the uncertainty of economic conditions. The funds would be used to retain at least 90% of your workforce at full compensation and benefits until September 30th of 2020. Your intent to restore 90% of the workforce as of February 1st, 2020, and restore all reduced compensation and benefits no later than 4 months after the end of whatever the federal public health emergency ends up being. Again, domiciled in the U.S. with significant operations, the majority of your employees in the U.S. You're not a debtor in a bankruptcy provision. There's no dividends on common stock or repurchase while the loan is outstanding. No, or outsourcing or offshoring of jobs for the term of the loan plus 2 years. No changes to your existing collective bargaining agreements for the term of the loan and 2 years after completing repayment. And you have to remain neutral in any union organizing effort during the term of that loan. So, moving on, we've had 3 key tax code changes that we think can benefit our members. First are some changes in the employment tax credit. Next is the employer payroll taxes suspension. And then some changes to net operating losses from the Tax Cuts and Jobs Act that passed a couple of years ago. Most important, and first and foremost, is the employment tax credit. What are termed as qualified employers can receive a credit against employment taxes of 50% of qualified wages for every employee from the period of March 13th through December 31st of this year. Now, qualified employers, a business fully or partially suspended due to government action, or that has suffered a decline in gross receipts over a period beginning in the quarter when gross receipts were less than 50% compared to the same quarter in the prior year and ending in the quarter when the gross receipts exceeded 80%. Qualified wages cannot exceed $10,000 for any employee. And if you have more than 100 employees, only wages paid for employees not providing services because of the shutdown or decline. If you, for employers with 100 employees or less, all wages paid during the period of shutdown or decline would qualify. So the payroll tax collection delay is a deferral through the end of 2020 for Social Security tax. It would still be due, however. So you would have to make a 50% payment by January 1st, 2021, with the other 50% of that Social Security tax being due January 1st of 2022. This does not apply if you are getting a full credit under the Paycheck Protection Plan, that loan would be forgiven. So you cannot, again, double dip. Now, one other key change, net operating loss and carryback and T&I limitation. Under, as I mentioned, the Tax Cuts and Jobs Act, we eliminated carryback net operating losses to prior tax years. However, under the CARES Act, which is what we term in DC as Phase 3, your carrybacks are allowed for 2018, 2019, and 2020, and allowing carryback to 5 prior taxable years. The Tax Cuts and Jobs Act had limited net operating losses to no more than 80% of taxable income, and now that's been upped to 100% offset for taxable years before January 1st, 2021. So finally, I'm going to touch on the Paid Sick and Family Leave Act here in terms of benefits that are available for you. As the Families First Coronavirus Response Act required certain employers to now provide their employees with paid sick leave or expanded family and medical leave that were directly related to COVID-19. The Department of Labor has a phenomenal website explaining all of these provisions. I encourage you to go view it to see what happens with the requirements. Oh, excuse me. In general, the Act provides that covered employers must provide to all employees 2 weeks. We've heard 10 days. We've heard 2 weeks. So that's why we have up to 80 hours of paid sick leave at the employee's regular rate of pay, where the employee is unable to work because they are quarantined pursuant to federal, state, or local government order or device of a healthcare provider, or they're experiencing symptoms and seeking a medical diagnosis. Or, obviously, at 2/3 of the employee's regular rate of pay because they are unable to work because of a bona fide need of care for an individual subject to quarantine, or, and this was key, care for a child under the age of 18 whose school or child care provider is closed, or other reasons related to COVID-19. And or the employee is experiencing a substantially similar condition as specified by the Secretary of the HHS, consultation with Secretaries of Treasury and Labor. So in essence, it's any employee whose kids are home, who or is sick or is being quarantined because they've come in contact with somebody and they're in a directive to quarantine themselves. It is important that a covered employer provide to employees that is employed for at least 30 days, up to an additional 10 weeks of paid expanded family and medical leave at 2/3 the employee's regular rate of pay, where an employee is unable to work, again, due to one of those bona fide reasons. However, we have tax credits to help you pay for that cost. This was focused solely on businesses under 500 employees. Oftentimes, about 80% of all folks were covered other than that, above 500 employees, so this was the major focus. And part of the pushback was we have to help compensate them for that. So covered employees will qualify for a dollar-for-dollar reimbursement through tax credits for all of those qualifying wages paid under FFCRA, Families First. Qualifying wages are those paid to an employee who take leave, again, for those reasons. And those tax credits also extend to amounts paid or incurred to maintain health insurance coverage. I put a link in here. It's a very extensive analysis up at IRS on who qualifies and how to qualify for those tax credits and the extent those tax credits are available. The paid sick family leave, again, as we've mentioned, employees fewer than 500. Very important here. Small businesses with fewer than 50 employees could qualify for an exemption for all of these requirements. You must apply for a waiver at the Department of Labor, which they have not issued the final guidance yet, but I've provided you the link to the employer fact sheets at Department of Labor below, if you so choose to do that. But again, the tax credits, Treasury has issued a rule saying the tax credits can be paid out immediately, not at the end of when you file your taxes. So you could recover those dollars very quickly up front. Again, I would encourage you to work with your tax professionals to do that if you do go towards the credit route. These tax credits, again, as we've mentioned, you cannot double dip between PPP and these tax credits. But again, if you don't use the PPP loan for those specific purposes, you can recover these tax credits and use the PPP loan for broader purposes of payroll. Finally, just want to touch on the critical business designations. We've had a lot of folks contact IAPD's headquarters and ask about how to get critical business designation. It's important to understand that while the federal government issues guidelines for critical business designations, it is up to each state to decide who a critical business is and whether they are allowed to stay open and keep their supply chain flowing. The Department of Homeland Security's Cybersecurity and Infrastructure Security Agency has issued these guidelines. And again, as I mentioned, it's not a federal mandate. Distributors are, in essence, covered in this. We have all the different little issue areas here, but what's under critical manufacturing distribution, we've worked with our sister organization, National Association of Wholesale Distributors, and the government has clarified that distributors are covered under the same critical manufacturing sector. If you want more information, here's the web link to the list and the CISA designation. I put an email in here that I received from a good friend at the Department of Commerce on the best ways for you to go about it. I just thought it would be fun to paste in his specific words, but he urged you to reach out to your local public health officials and your local mayors, because they will end up working with their states to designate who within their areas are critical. And again, they want to encourage you, however, and this is directly from the Department of Commerce, the reason for the closure orders are to save lives. So if you are not truly critical, they encourage you not to remain open. But that's up to you then to work with your local folks to ensure you are covered. But this CISA directive should give you some information to provide to if you decide to go the route, you can provide them with this information. And that's the gist of our presentation, and would like to turn it over to Courtney or anybody else with any questions that we can answer for you.
Thank you, Ari. As a reminder, please submit any questions using your webinar toolbar. And we've already had a couple come through. Can you clarify dismissal or separation?
So I'm not sure, the dismissal and separation, meaning if you separate from an employee, and I assume you're referring to the economic injury disaster, or the Treasury loans, which had a provision for that. It's important to note, again, every one of these programs is designed to give you forgiveness if you can keep people on payroll. So I don't want to get into the legal definitions. I defer to your counsels on that. But understand that every program, their goal is for you to keep 100% of your employees on payroll. I think the whole point of dismissal or separation was if you had an employee who was disruptive or other problems outside of economic hardship, there were considerations that can be made in some of the programs for that. But again, their goal is that everybody stays on payroll at this time. And is not intended to, they want to discourage as much as possible any termination. And quite frankly, the PPP program encourages you to rehire to expand your benefits. So that's the most important focus of these programs.
Ari, in a similar vein, another question said, keep all employees. What if they quit? Is that penalized?
Well, if they quit, then that changes the way they would be covered for their unemployment benefits too. So that's more on them than it is you. Again, at PPP, they're looking for a reduction of 25% of your workforce. So I think if one employee quit, depending on your payroll structure, and again, this would be really up to your financial advisors and how your payroll, your administrative folks look at this. I don't know what that one person would represent in terms of your total payroll structure. But I don't think one person leaving would have a disruption to the majority of this program for you.
Okay. Are funds taxable or tax-free?
The intent is all of this is tax-free. So you would not be taxed on the benefits of these programs. That actually was a very significant fight during the passage of this bill.
Not a question, but a comment. One of our members said, we received the following from JP Morgan Chase this morning. Financial institutions like ours are still awaiting guidance from the SBA and the U.S. Treasury. As a result, Chase will most likely not be able to start accepting applications on Friday, April 3rd, as we had hoped.
So what's interesting is I actually have the interim rule from SBA. It has already been released. The final rules will not be released until later after comment period, but the guidance has been provided to them. This is why, however, we encourage you to reach out to multiple banks that you have relationships with, if you do, and apply through multiple banks. I would not wait to apply for these packets, for these benefits. If you go to the webpage I sent with a link at Treasury, the application is not very extensive or complex. I believe it's a total of 3 pages. Get it in sooner rather than later. And if Chase is, as I mentioned, Bank of America has announced they don't want to work with others that are not already account holders. We saw Chase's announcement this morning as well. That was well publicized. But SBA did release this morning the interim rules governing the program. So hopefully Chase will start moving quickly. But I would apply, as we often joke in politics about vote early and vote often. The guidance we've heard from SBA staff has been to advise our members to apply early and apply often. So applying through multiple institutions will not preclude you from being awarded your loan. You can only get one, but I'd rather have one moving rather than one sitting at another bank. So do not hesitate to apply at multiple locations. All it will do, they've advised us at this point, is all it will do is void your other applications later. So once you receive one loan from somewhere. So apply early and apply often if you can.
Great. Ari, when you calculate the average monthly payroll amount for the PPP loan, do you include payroll taxes?
So again, I have, if you go back to that slide, and let me go back to the slide for you, if I can get my way back up to it. I have all of the considerations, and if you go to the application, it looks for everything that you would need to do this. So included in payroll, again, a salary, wage, commission, you see here on the list, including state and local taxes. So those are all factors to be considered in your payroll application. Again, if you go to the application, it will stipulate all of the numbers they're looking for.
Ari, the CARES Act was phase 3 of legislation to move through Congress. Will there be a phase 4? And if so, what will be included in it, and do you have a time frame?
That's an excellent question. Yes, there will be a phase 4 at some point. The House of Representatives, led by Speaker Pelosi, would very much like to make phase 4 happen sooner rather than later and really focus on recovery. They are speaking of spending trillions of dollars on infrastructure and government-funded types of employment. However, the Senate wants to wait to see the effects of phase 3 and then decide what more needs to be done before acting. So I don't anticipate action. The House may release its package maybe as early as next week, but I think it would be more likely in the next 2 weeks. And the Senate has said we don't plan on doing anything until we see the initial effects of phase 3, how quickly this money goes out the door, and also whether it's truly having an effect. And frankly, they also want to look at the waste and the fraud and the folks who've been left out of these programs to try to fix that. So I would see phase 4, I would expect multiple more phases to come. In terms of phase 4, from the IAPD perspective, we're working very hard to try to incorporate our open competition and infrastructure spending language that we know would benefit a significant number of our members from being able to compete in infrastructure packages. But at the same time, I think we're going to be dealing with both a new spend towards government spending, and if the predictions of the healthcare professionals are that this lasts through the summer, come to fruition, I would expect there to be a second round of economic relief for small businesses if we remain in this sort of a state for a long period of time. So I would think we're going to have multiple new phases coming forward.
Thank you, Ari.
And if I can encourage one more thing, if I can, excuse me, Courtney, just we would love to get your stories of what you're doing in the COVID-19. We have heard peripheral stories of IAPD members providing durable medical devices, PPEs, any number of things. We would love to share those stories with the White House and with Congress. We think our industry is playing a critical role in helping our country move forward during this crisis. And I think it's a great opportunity for us to truly get our stories out. So if you can share those with Liz Novak with IAPD, we're going to consolidate those and present them to the White House and to Congress to make sure that they're truly understanding the positive impact our members are having on during this crisis. So, sorry, thank you.
No, great plug. So this does conclude our presentation. As a reminder, you will receive a survey about today's presentation. Once you complete the survey, there will be a link to download the presentation slides. We will also have the slides up on our COVID-19 webpage on IAPD's website. A recording of today's webinar will be available on the website as well. Please feel free to share the slides and the webinar recording. So thank you all for your time. We hope to see you again on Friday, April 17th for IAPD's next webinar, Securing Your Business, Navigating Cybersecurity Challenges. This webinar will cover how your company can minimize risk, maintain compliance, and increase efficiency in an ever-evolving cyber landscape, including while your employees work from home. Registration is now open. Thank you all for your time. Have a wonderful weekend.